Chuck Barone, Wednesday, April the 19th, 2023. Rocking and rolling through another wonderful week on Wall Street. Words escape me to describe the condition of this market right now, guys. It's just silly season. But anyway, before we start the show, as always, want to welcome everybody. Thank you guys for your support. We appreciate your guys' support for the show, watching the videos, and all you guys do. You guys mean the world to us. Okay, so let's talk about these markets today. Well, we know that the markets have been drifting, and we know there hasn't been a lot of news to drive these markets, which are now pretty much rumor or news driven, and especially on the topics of the Fed, inflation, possible recession. So the market's just getting whipsawed all over the place because of all this conflicting data come in. You're getting all these Federal Reserve knuckleheads out there talking spook in the market. You got signs of the economy doing okay. At the same time, all the talk is about recession and the recession coming and a banking crisis and credit crunch and all this stuff that could or is happening already. So it's just been a wild couple of months on the market. Today, another nothing day. I mean, just the Dow actually moving down 79 points today, but still sitting at 33,897. So, a 79-point move is just not a non-event. The S&P, in essence, flat today, down less than 1 point, sitting at 4154. And the NASDAQ gains 3 points today to 12,157. But then again, 3 points on 12,157, just nothing happening. Now, we had some earnings today, and we had some other interesting stuff come out. We'll talk about housing starts and building permits. Real estate information. Today is kind of a real estate day in the markets. But stock market just drifting, waiting for the next news cycle about the Fed, about inflation, about possible recession. Of course, there's all kind of other factors in this market right now, geopolitical, our own politics, debt ceiling, and all the other silliness that dumbasses in Washington inflict on us on a daily basis. But so the market, nothing driving the market right now. Everybody kind of just sitting there holding their breath. Now, tomorrow will be a big data day. So tomorrow we'll be here to bring you guys up to point on, the important stuff, the most important of all, unemployment. Bonds today, yields continuing their way up. So bonds selling off. The 10-year up 3 basis points, 3.60%. The 2-year jumping 5 basis points to 4.25%. So now the inversion is spreading wider. Now you're up to 65 basis points. We were under 50, 10 days ago? So now the inversion starting to spread wider. Of course, this signals, according to the market, the history of the market, the signals recession coming. Now, I've talked about this before as well. An inverted yield curve is not always a 100% predictor of a recession, because we've had inverted yield curves before, just like we did last year, where the recession did not come. But every recession that's actually happened has been preceded by an inverted yield curve. So there you have it. The dollar today up very, very small, still under 102 at 101.97. Hanging in there, the dollar, not a lot of news, just kind of staying in that range between the high 101s and below 103s, kind of in there in that range. Not a lot been happening with the dollar either. But metals today, I was surprised. I thought metals might have a good day today. Kind of ended up mixed, with gold down $9.90 at $1995.20. Silver up 8 cents, $25.26 per ounce. So silver consolidating nicely above 25. Gold having some issues with that resistance at 2,000. Then the good news is it seems to be, if it dips below, it's not very much below. And we've had more days above than below lately. So I think that once it breaks through and builds its consolidation, which it's doing now, Gold's going to have another spike up. Oil today, down, back in the range we talked about. I'm kind of telling you guys this is going to be happening. Oil down $1.79 a barrel today, $79.07 for a barrel of West Texas Intermediate, back in that $75 to $80 trough. I think that's where oil's comfortable right now. So we'll see if it stays in that range, breaks down below it, which it has, or it doesn't seem like it has much strength at 80 or higher. Interesting, I took a look at natural gas today. Everything's been going up, and what these guys do, I love these guys. Our corporate overlords, greedy piggies. So what happens is natural gas spikes. We talked about that back then. I was actually reporting on natural gas with oil every day. The market drove me crazy that I couldn't do it anymore. Natural gas was up above $9 for a million BTUs. So everybody was freaking out. You remember back when, oh my God, is Germany going to freeze this winter? The Russians cut out the supply, and there was a lot of hysteria. Oil spiking, but not as much as gas. I took a peek today. Natural gas down to $2.20 per million BTU. Well, guess what, man? That's a massive decline of about 65%. Guess what, though? The gas company's not lowering my gas bill. They want to raise it. So they're pricing as though the gas prices spiked up and stayed there. And even though the prices are coming down on their actual resource they sell, they're not lowering their prices. I saw that today, too. I went to lunch with some friends. I bought lunch. Nothing big. But, it was chicken. We had chicken for lunch. As we all know, during the pandemic and the supply chain issues and the bird flu and all the stuff that was happening, chicken spiking along with eggs. Now chicken back down, eggs coming back down. Guess what? The prices in chicken in restaurants still going up. So this is straight up greed, nothing more, guys. They're looking to... Corporate America could give a crap about you. They only want your money. And they want to get your money while giving you as little as possible of the service or product that they provide. Just that simple. So anyway, oil down and natural gas a ripoff. Oil and gas suppliers ripoffs, screwing consumers, power companies, gas companies doing likewise. Bitcoin today, giving back some gains today, down 1,062 last time I looked, 29,227 for Bitcoin, back below the 30,000. I think it's going to get back above it and hold there. For you Bitcoin people, if you Google Barone's magazine, they had a very interesting article about Bitcoin. I didn't want to get into all of it and take up a whole show to talk about it. But they're making the argument that they're making the case for much higher prices than they are now. Talking about the consolidation at 30, when that's 30,000, when that's finished, about the next spike up to about 36,000. Very favorable opinion. And Barone's is pretty conservative, guys. This is not like some lame ass thing that hasn't been around, doesn't know what they're talking about. Barone's has been around for a long time. Very conservative. They don't go out on a limb very often with their predictions. So I would say that their optimism gives me optimism that Bitcoin probably has some legs. News you guys need today, a lot of real estate stuff today, guys. The commercial real estate market. Well, things are not looking good with commercial real estate. It looks like that market could be headed for a crash similar to what housing suffered back in 2008, 2009. Commercial real estate investors just choking on debt. And here's the bad news. Most of the commercial real estate debt is issued by small regional banks. That's not JP Morgan's Ballywick. That's more of the Republic Bank or the Silicon Valley Bank Ballywick, right? So, big problems coming for commercial because commercial real estate investors have $1.5 trillion of debt coming due by the end of 2025. So all of this debt, none of it gets paid, guys, okay? All of this debt that's coming due between now and the end of 25 has to be refinanced. And it's unlikely that they're going to get this debt refinanced on favorable terms or at favorable rates. So they're really afraid the default rate and the foreclosure rate on commercial properties could spike pretty dramatically. We have a credit crunch starting. Banks tightening their standards, certainly not liking certain sectors, commercial real estate being one of them. We know about the problems with vacancies in commercial real estate. We talked about that in the past on the show. We talked about delinquent rents and how much rents are. And we talked about people not wanting to go to the office anymore and the push and pull between businesses and their employees, who businesses want to get them back in the office, believing they're more productive there. The employees want to continue working from home for the convenience, the absence of a commute. And most employees feel like they're just as productive from home as they are from the office, right? So we've had that push-pull. But now, well, we got some difficulties in commercial real estate, tons of vacancies, nobody looking to lease commercial real estate, no buyers for commercial real estate, even at the distressed prices they're being offered for, and no new tenants coming their way. Because people don't want to lease office space, there's a reluctance for people to even go to the space they're already leasing, let alone taking more. And a lot of the businesses that are starting today, we're opening more new businesses than we ever have in this country, but a lot of them are hustle businesses, single person businesses. A guy goes, he incorporates himself, he hustles on his different, things he's doing, whatever they may be, e-commerce or whatever. Those are the businesses that are being started, not businesses that require a lot of space, right? So big trouble coming for commercial real estate. Be careful, guys. If you have any exposure to commercial real estate, whether you own it, whether you actually own the physical real estate, whether you're invested in real estate investment trusts, however your money might have exposure to commercial real estate, I would tell you now, be careful and look to hedge that position or even reduce or eliminate it. Housing starts. Now let's get to residential real estate. So we know commercial real estate going down the tubes super fast. Residential real estate, on the other hand, prices holding a lot steadier than I really thought they would. I thought by now, here in Vegas, we would be seeing prices under $400,000, still sitting at about $425,000. Now that's down $60,000 from the peak, but it's not down enough for first-time buyers to get into the market with interest rates where they are, right? So anyway, residential real estate, the news of the day is housing starts and building permits. So this is all about new builds today, right? Construction builders. Construction of new homes is actually rising, even though housing starts are not, because now with rents slackening, not really coming down, but not increasing the way they were, construction on new apartments is slowing down. Big investors not wanting to build new apartments. The cost to build is expensive, more than it was. And if they're afraid they can't get these big rent increases they've been getting, they're slowing down on building apartments. Well, isn't that wonderful? Now, the good news is, residential real estate is happening because what's been happening here and across the country, sales of existing houses is shrinking hard because people do not want to sell the house they're in and give up their 3% mortgage to buy a new house, which is smaller but more expensive, and take on a 6.5% mortgage. So the supply of existing homes for sale is shrinking dramatically, getting back down to a drought situation, driving home buyers to new construction. New construction, happy to take those buyers. Just one problem. Now their supply is starting to fall. It looks like, new builds with building permits dropping almost 9%, showing less supply coming in the future of new houses. big supply problems with existing houses. So they got the exact opposite of commercial real estate right now. Commercial real estate, too much supply, too many vacancies, not enough tenants. Residential real estate, not enough supply, right? Too many people want, too much demand, not enough supply, versus the opposite in commercial. Interesting stuff, right? So prices on existing houses actually falling 3.3% in March. That's the largest decline in residential real estate since 2012. Price is still too high. The new median price across the United States, $400,528. That's high. Listings dropping like a stone. Listings year over year down 23%. So nobody wanting to sell their existing houses. New houses and the supply of new builds drying up. What does that tell you is going to happen, guys? I can see prices coming down in commercial real estate for the reasons we spoke. And now I'm starting to think that even with rates as high as they are, prices at least are going to stabilize for houses, probably start creeping back up. You're going to start to see these silly bidding wars where there's not enough supply and there's too much demand. So people actually now are going to outbid each other for what's available. We saw this phenomenon in 2021. It made me go crazy, pulling my hair out. Buyers sitting in my office telling me they want to pay $25,000, $35,000, $45,000 more than the house will appraise for. That was a big problem for me. I really didn't feel like, that was a good idea. You're giving, even if the prices continue to go straight up, you're giving away the first $40,000 or so of equity you're going to earn. Why do that? Just for the privilege of buying that house? No. So anyway, there you have it. Commercial and residential real estate, both having their unique sets of problems. It looks like commercial real estate in a very dire situation. It looks like residential's going decently right now, even though it's not a super strong spring buying season. I'm actually having clients in my office. I got some actual people who are going to buy houses. Yay, holy crap. So things starting to, signs of life happening in residential real estate here in Vegas. So we'll see where all of this stuff continues to go. Of course, I'll be bringing you guys the news on all of this, as it's my everyday job I do, okay? And finally, wrapping things up today. Last month I premiered my first Asshole of the Month. Today we have our newest. Yay for these schmucks, these people, these tone-deaf idiots. So this month, the month of April 2023, Asshole of the Month, going to Miss Andy Owen, CEO of the furniture company. You guys have probably seen this story. It's gone viral. It's gone crazy. This is the CEO who got caught on a Zoom call telling the employees that they weren't going to be getting any bonuses this year and trying to make it not so bad for them, although most employees who get bonuses know that that bonus is a significant portion of their yearly pay. She advised the employees, this was the best, she said that you can visit Pity City, but you just can't live there. And she also decided that they needed to focus on the $26 million in sales the furniture company needed to make and not on their own bonuses. Now, this is delusional because this person actually believes that people are at this company more for the benefit of the company than themselves. Now, the company might feel that way because in their mind, you're just a number. You're there for the benefit of the company. You're not even a human being in a lot of cases. But most employees don't really feel that way. They're there for their own benefit. They want to make as much money as they possibly can. They want to make that money without going completely crazy, working a Brazilian hours of overtime, or being stricken with stress, or being overworked every single minute of every day to earn that money. But here's the kicker. Andy Owen, while denying all the employees of the company their bonuses, took a $1.5 million bonus for herself, bringing her total compensation up to $6.5 million for the year. Isn't that wonderful? You gotta love these. I mean, really? So this woman, who had a $5 million base pay, could have sacrificed her $1.5 million bonus to split up among the employees. So at least they would have got a little how do you do for their efforts for the year, right? But no. Took it all for herself. And screw you, loyal workers. You gotta love this stuff, man. Corporate America running amok. The haves at the top of these corporations completely out of touch with the guys like us, working people. It's just amazing to me how somebody could possibly be that friggin' lame, man. Really. She thought that, these employees would not find out that she took this giant bonus. It's public record, man. It's a publicly traded company. I mean, I guess people have to have their delusions, right, guys? But anyway, that's it for the day. We appreciate your support. We'll be back tomorrow. Big data day tomorrow. Lots of stuff coming. I might be gas bagging a little bit longer than usual. Probably see a little more activity in the stock market tomorrow because of the data that's going to be coming. The market's kind of been very quiet this week waiting on this data. So let's see what the data is and how they react to it. We'll be here to bring you guys all the gory details. In the meantime, have a great evening, everybody. We'll be back tomorrow. Until then, thanks.